You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome. You're listening to The Deep Dive. We're here to give you a fast track on the really big moves in digital assets, especially what's been happening since mid-July 2025.
Yeah, things are moving fast.
They really are. So much going on, but we're going to, boil down to the key takeaways for you.
Exactly. And these aren't just like random headlines either. If you look closely, they show a real acceleration in how this whole digital economy is being built and, importantly, regulated.
Right, professionalized almost.
Definitely a feeling of that. It's quite a moment.
Okay, so let's jump right in. First big thing, regulation and market reentry. Polymarket is back in the U.S. in a big way.
That name rings a bell, popular back in 2024.
That's the one. Huge during the election cycle. So they've just acquired QCX. It's a CFTC-licensed derivatives exchange.
Okay.
Cost them $112 million.
Yeah.
But this basically gives them the regulatory stamp they needed.
So they can legally bring those crypto prediction markets back to U.S. users?
Precisely. And, those old DOJ and CFTC probes from 2022, all closed now. Cleared up.
Wow. Okay. So that's interesting because it's not just about Polymarket, right? It kind of sets maybe a template.
A precedent, yeah.
Yeah, a precedent for other crypto platforms wanting to operate legally in the U.S. It suggests maybe a more practical regulatory path is opening up for certain things.
Definitely a pathway opening up. And speaking of compliant ways for U.S. traders to get involved, Coinbase has done something pretty major too, haven't they?
Oh, yeah, absolutely. They've actually launched perpetual futures regulated by the CFTC specifically for the U.S. market.
Okay, tell us more. What kind of contracts are we talking?
So these are nano Bitcoin and Ether contracts. You get up to 10x leverage, crucially no monthly expirations like traditional futures.
Right, perpetuals.
Exactly. And the fees are pretty low, starting around 0.02%. Honestly, this is the first time U.S. retail folks can properly access these perpetual-style derivatives on a, fully compliant platform.
That is a big step for accessibility. But, okay, 10x leverage, even on a regulated platform, what should people be aware of? Risks.
That's a really important question. Look, compliance adds safety nets, sure, but leverage is leverage. It magnifies everything wins and losses. So higher leverage always means higher risk. You absolutely need solid risk management. Can't stress that enough.
Good point. Definitely something to keep front of mind.
Yeah.
Okay, so while that regulatory side is clearly pushing forward, enabling broader access, there's also innovation happening on the tech side, right?
Yeah.
Pushing the boundaries.
Always.
Let's talk about Solana. Something called BAM.
BAM. Yeah.
All right, BAM. Block building architecture for Solana. Sounds pretty complex. High performance system. T's. Updated validators.
Yeah, basically think of T's trusted execution environments as like super secure, private little computing zones.
Okay.
BAM uses these, along with updated validators, to allow for private, verifiable, and programmable transaction sequencing. So your transaction, it stays encrypted until the very last moment inside that secure zone.
Then that helps with MEV.
Exactly. It slashes harmful MEV, maximal extractable value, where people try to front run or sandwich your trades. Plus, it opens up new ways to make money through things called plugins.
And this all happens without messing with Solana's main code.
That's the beauty of it. No change to the core protocol. It's a layer on top, making things fairer and more efficient. Quite clever, really.
That is quite a leap. So connecting the dots,
Yeah.
you see this foundational tech getting stronger, fairer.
Right. And whenever you see big technical steps forward like BAM, you often see big money following close behind. Which brings us to SharpLink.
SharpLink, okay. What have they been up to?
Well, they've been buying Ethereum, a lot of Ethereum.
How much are we talking?
Just between July 14th and 20th, they picked up nearly 80,000 ETH.
Wow.
For about $259 million. That brings their total stash to around 360,807 ETH.
That's huge.
It is. It's actually the largest single weekly ETH purchase that's ever been publicly disclosed by anyone.
So that's more than just a big number. That's a major signal, right?
Yeah.
Institutional confidence.
Absolutely. A massive vote of confidence in Ethereum's future, its utility, its stability, especially as the regulatory picture, like we were just discussing, gets a bit clearer.
Okay, so let's bring it all together for everyone listening. We've got major regulatory moves letting platforms like Polymarket back in, making things like perpetuals accessible via Coinbase. Then you've got these deep tech innovations like BAM on Solana, making the infrastructure itself better, fairer,
robust. Yeah.
And on top of all that, huge amounts of capital flowing in from players like SharpLink. It just feels like the whole space is maturing incredibly quickly.
It really is. You're seeing this convergence, right? Regulation, tech, big investment, all accelerating together.
So, final thought then.
Yeah, maybe something to chew on. Think about how this rapid professionalization, this expansion of digital assets, how might that start reshaping not just the big traditional financial markets, but maybe even, our day-to-day transactions? Could be sooner than we think.
Spoken Tech for your ears.